A very pleasant afternoon to everyone. Welcome to MyTrade's 2024 Midyear Market Outlook. Kamusta ang inyong mga hapon, everyone? So I would just want to look at the comment section to see who's watching here with us. So we have Steady Tito right here watching from the Philippines. Hi, Steady Tito. I've seen you in our other programs as well. And we have here MMD, comment siya ng heart, 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 and Mr. Mon Lawas. Embolode, hello, good afternoon. So, to all of you joining us here for the first time, please don't be afraid to put in your comments. We're here to learn today, and we're very excited to do this market outlook with you. The first half of the year flew by so fast, and today we're here to hear insights again from my trades experts on how the rest of 2024 could possibly play out. Now, this is a special edition of our Market Outlook kasi I have a very special co-host here with me. Can you guess who it is? So para sa ating mga audience here today, can you put in a guess in your chat box kung sino ang magiging co-host ko? Now, as a clue, yung magiging co-host ko for today is one of our regulars in the Beyond Connections segment natin in bi-weekly. So if you have a guess, please type it in the comment section or the chat box and we'll see if any of you got the answer right. Malay nyo, if you get the answer right, we'll give you a prize. So right now, let's just do other greetings. So LB De La Cruz is also here. Hi, great green afternoon, LB. And I have Rose De Luna also here with me. So guys, if you have a guess, sino ba sa yung mga kasama natin from Beyond Connections usually? So, andyan si Bess, si Isaiah, si Rainier. Who do you think will be joining us this afternoon? Put in your guesses in the chat box. All right, so let's see. We have Japanese characters here from watching from Tokyo. And may question na siya agad. Oh my gosh. All right. LB De La Cruz said, Rainier. Okay, any other guesses? Siya daw ang aking magiging co-host. Sir Zaldi is also here with us. Hello, good afternoon. Tony Lim also said, Rainier daw ang ating mga kasama. And Ella Vida said updates. Updates? Tama ba, Ella? But okay, sige. I think meron na tayong, alam na natin kung sino yung merong fan base sa ating Beyond Connections. And you guys are right, LB and Sir Tony. I will have Rainier here as my co-host for today. Hi, Rainier. Please join me on the floor.
Hello, everyone. Hi, Kades. Thank you for the greeting. Very happy to be here to get a chance to be part of our mid-year outlook. So this afternoon is also a chance for us to have a little fun. So as you learn with us, every one of you will get the chance to earn a MyTrade merchandise or a 500 peso credit to your MyTrade account. But only some will be able to win. We tried our best to make it possible for everyone to get a prize, pero I think our budget will only for some of you guys. So stay engaged, be active in the comment section, and stay alert for our raffle and trivia rounds. So is everyone excited for what we have in store for you? So if excited na kayo, please type "I'm excited" in the chat box if you're ready for the program.
All right. So, hi, Rainier. Thank you for joining us here ngayon. Kahit na alam kong medyo diba, we have Beyond Connections ng Thursday, but thank you for giving your time for us here today. So, Ice Cream said, I'm excited. LB De La Cruz says, I'm excited. So, sounds like our audience is already ready for this afternoon. So, to welcome us all for our market outlook, we have MyTrade's very own CEO and chairman, Mr. Paul Su. Let's give him a virtual round of applause for his welcome address.
Good afternoon to everyone. It's that time of the year where we start to look back at the last 6 months of the year and then forecast what will happen in the next 6 months. It's important for these things to be briefed to all the customers so that then everybody shares the view of Abacus Securities, primarily through our research team headed by Nicky Franco, and of course our technical analyst, Lawrence Gonzaga, and your team here in Abacus Securities. Since the end of pandemic and even up to the last 6 months up to June, interest rate remain high almost everywhere in the world. Although we're seeing cuts happening in some countries, and there's a strong expectation that in the Philippines, interest rate should be lower by around August, where the central bank head has mentioned in his pronouncement. We also expect the US to cut their interest rates, and with that, a common activity around the whole world. What does this mean? Business mostly borrow money, and the cost of operating will become lower, cost of production will become lower, and therefore we do expect better results, to companies that have high debt levels or even reasonable debt levels. And these are trends. So in other words, it's not usual to cut the rates and then you change, 6 months later you increase the rates again. Usually, as you cut the rates, the series of cuts will happen over time. Much like what we saw when the world had to increase interest rates to control inflation. Inflation, the last 6 months has been cooling off. Still manageable, still in the trend to where the central bank has set their targets, both here and in the US. So I think basically the next 6 months becomes interesting for everybody. And you see, one of the things you have found out is that the stock market doesn't move in a straight line. It moves in a trend. So hopefully in the next 6 months, we start to see the trend continue moving up. In fact, the last 6 months is already higher than the same period a year ago. So the next 6 months is going to be a better time for market. Prices should go up, companies should start making money, and investors should come in and take more positions into it. So what to expect, what issues to look at, and how to anticipate the ups and downs in the market, please listen to this presentation that the team has prepared for you. And like you, we wish you and us make more money in the second half of this year. Thank you.
Thank you for those words of wisdom, Sir Paul, and for opening the floor of our program for today. Personally, I also am very excited to hear what our experts have to say on what we have to watch out for in the next 6 months. Ikaw din ba, Rainier? Excited ka na din ba?
Yes, very excited. And ayoko naman pangunahan sila Sir Nicky and Sir Lawrence. But I like what Sir Paul mentioned there on the market na it doesn't move in a straight line. Since it's basically a reminder for us to everyone na kapag magkaroon ng downturn, especially after a few days of ups, there will be downs. It's important to remind everyone, especially investors, that uh, to remain intact and not be shaken off or shaken out by some downturns. We should remind ourselves on why we have invested in the first place. So
Yes.
let's try to keep that in mind. And ayan.
Yes, keeping in mind RY, I very much agree, but I'd like to hear the thoughts of our audiences as well. Feel free to share your thoughts in our comment section about Sir Paul's opening speech. But while you're doing that and thinking about how Sir Paul's speech affected you today, we're gonna have our first raffle draw. So, team, pakilabas ang roleta tayo'y mag-draw ng ating first raffle for the day. We're gonna have three winners of MyTrade's merchandise. Isn't that very exciting, Rainier?
Very exciting. So now if you see your name na madraw kayo, make sure you take a screenshot, then send nyo sa amin via chat, either in Facebook or I'm not sure kung kaya sa YouTube, but yun, as long as you will be able to send us a screenshot, our team will be on standby and we'll share a link to our chat box so you can get in touch with us after.
Mm-hmm. All right.
Yeah.
So we're ready to do our first draw. Let's do this, team. Okay. So for our first winner, Rainier, who's this? This is Crystal May Porras. Please make sure to take a screenshot, ha? And then our next winner,
The winner, Eleazar Gayon.
congratulations, Eliazar. And then for our last winner of MyTrade merchandise.
Kasali ba tayo dito, Kadis?
No, actually, parang kasali yata ako. Alright, our last winner is Jennifer Carpio. So don't worry guys, if you did not get to take a screenshot of your names, we did. So we'll just try to get in touch with you as well after this program. But just I would like to say congratulations, you won a bag of MyTrade merchandise for this part of the program. Pero hindi lang yan ang pwede ninyong mapanalunan for today. But please don't forget to reach out so we can get in touch with you also. Alright.
Okay. So,
Kinabahan ka ba doon, Rainier? Akala mo
don't
ba
worry
matatawag
everyone
ka?
sa mga hindi. Sorry.
Sorry, no, wala kaya Rainier ng konti. Sabi ko, akala ko, kinabahan ka ba kung matatawag ka? Kasi ako kinabahan ako ng konti. Nag-register din kasi ako.
Ako nalimutan ko yata mag-register.
Yan. So next time, dapat magre-register tayo sa ating link.
Ayun. So everyone, sa mga hindi natawag, and for those wanting to win, just keep tuning in. We will still have more games and more prizes to be given out. And I think we can start now. So apart from that, we can probably go into our main event. So to kick things off,
Yeah.
our first speaker is the Philippines' first chartered market technician with over 20 years of experience in the field of technical analysis. And as a testament to his skills, he accurately predicted the October 2008 market crash and the market bottom in March 2020. We usually rely on his insights weekly through the Abacus Super Timer. So if you're a MyTrade subscriber, so you're supposed to be able to get these emails and be able to read some of the weekly technical reports. And he is the brains behind this report, basically the technical research report of Abacus Securities. So we are in a treat as he joins us live today to give us a technical outlook for the second half of the year. So everyone, please welcome Sir Lawrence Gonzaga.
Hi, Sir Lawrence. You have the floor, sir.
Hi. Today we will look at the weekly chart of the PSCI for the macro picture. Then we will look at the daily chart to see what's going on today. And finally, we will also look at some of the more active stocks. First slide. Uh, this is the weekly chart of the PSEI. On the weekly chart, we saw the index peaking at around 7,550 level in February 2002. Since then, the market has gone sideways with a low of around 5,700 made in October 2002 also. So from 2002 onwards, the PSEI has just traded within a range, never going above or below the high and low levels set in 2022. It appears that a triangle pattern is currently being formed, and the next big move will depend on whether the PSEI breaks out above 7,000 or falls below the 6,050 level. These are the two levels that we would be watching keenly. 7,000 for a breakout and 6,050 for any potential breakdown. Next slide. I noticed that today there is a net foreign buying of around 460 million pesos today. So this is a welcome change from a spate of foreign selling nonstop, basically. And today the PSEI closed right at the 50 and 200-day moving average cluster near the 6,500 level. So this is a key level to watch, the 6,500 level for the short term. We shall see in the next few days if the market can stay above these key moving average lines, as it would be bullish for the short term if the PSEI can stay above 6,500. Further up, there are resistance levels at 6,532, which is not far away. And there's also another one at 6,578. Next slide. We run some screen with a minimum. We look for stocks with a minimum traded value of 25 million pesos that are above the 50-day as well as above the 200-day moving average line. And these are the stocks that came out: Globe, PLDT, ICT, Manila Water, Converge, and House. Next slide. Here we have Ayala Corp. Basically, the stock has been going nowhere. It's been drifting down, and it has to break out for it to move higher. The key level to watch is 593.5. Next slide. Then we have ASEN. ASEN has been performing quite decently of late. Resistance 510 and 528. And it's also above the 50 and 200-day moving average line. Next slide. We have Ayala Land. Resistance after 29.15 is at 29 and 85. There's this 200-day moving average line acting as a resistance near the 30.6 level. And there's also another resistance at 31.55. It's currently above the 50-day, but still below the 200-day moving average line. So we will see more of the choppy action. But with the move today, we believe that Ali will be able to slowly work its way higher. Next slide. We have Aboitiz Equity. This stock has been under heavy selling pressure, but the good news is The company has been buying back whatever the foreign seller has been throwing into the market. So I think it would be a matter of time before AEB turns around. But currently, the stock is just drifting below the 50-day moving average line. And we go to the next slide. AGI, it's currently below the 50-day moving average line and also below the 200-day moving average line. So the stock is in a downtrend and it has to break 930, afterwards another one at 965. Next slide. This is a RIT. The shaded blue line represents the resistance. It's between 35 to 35.95. Next slide. DMC. We also have resistance drawn on the chart. That's also the shaded line. 1138, then 1154. Next slide. Next we have Globe. Globe has been doing well. Today it broke out again, and it may be looking at the resistance at 2180 and then 2360. Long-term chart is positive. I would be a buyer of Globe for the long term. Next we have ICT. This chart was done yesterday, and today we saw a breakout. We should be looking at a target of around 390. Next, Megaworld has been drifting down and finally it broke down. So this is not something we will be looking to buy as of now. Then we have Meralco. Okay, Meralco has support near the 352 and 357 level, but resistance near 380 and 390. Next slide. Manila Water. The chart looks okay for the long term, but it has to contend with a few resistance levels, 28, 30, then 32.40. Next slide. RLC, there's really not much going on here, except the stock is just drifting lower. Next. We have SM Prime. Resistance after 29.75 is 31.20. The MACD is about to cross up, so we should see some positive momentum for SM Prime in the near term. Next slide, URC. URC is consolidating right below the 50-day moving average line. Support is at 101, resistance 112, and then 119. Next slide. Oh, here we have some technical notes of the other issues that we didn't put a chart on. BDO, it's below 50 and 200 day, but the downtrend resistance breakout is bullish, break of a downtrend line. We have a resistance at 140, 140. BPI is just bouncing from below the 200-day moving average line. For some smaller issues, Bell has pulled back from 299 and it's actually near a good support level. And then we have Cebu Pacific. It was trading at an all-time low not too long ago, and we are still looking for upside reversal pattern. For a small stock, Fruit is near support at 75. It looks like a long-term bottoming out process. Then we have GT Cup. There's good support at 553, and we saw a recent run up to 620, followed by another drop. Today it closed at 590, so GT Cup may be a buy on pullback. Next slide, ICT, we discussed already. Metrobank, their support at 63.50. The stock is below the 50-day but above the 200-day, so we'll see more choppy action. And for SM, resistance 854 and 863. Then we have Union Bank. There's strong support near 32.90 and 30. Yeah, that's it from my end.
All right. Thank you, Sir Lawrence, for those insights. There's much to unpack here, no, right, Rainier? But Sir Lawrence, we won't be asking you any questions yet. We'll get to the questions after this segment that I'm sure everyone is also waiting for. So, Sir Lawrence, please, we'll see you later, but don't leave us just yet. We'll have the Q&A after this segment. So, Sir Lawrence, thank you for your insights, but we'll have the questions ready for you later. Right now, I would like us to proceed to the next part of our outlook. So we heard the technicals, but now we're going to proceed to the fundamental outlook for the rest of the year. We're shifting gears now, and leading this discussion is Abacus Securities Head of Research and the only Filipino recognized by Forbes magazine as one of Asia's best stock pickers, ranking in the top five, to share his insights about the potential market trajectory for the next half of the year. You know who it is. We have Sir Nicky Franco here on the floor. Sir Nicky. Hi, sir. Sir Nicky, you're on mute.
Hello, everybody. Sorry about that.
Uh,
Good afternoon, everyone. Thank you for joining us for today's mid-year market briefing. Hopefully, you can get a lot from our presentation for today.
All right, Sir Nicky, you have the floor.
Okay, thank you. So, for today, the title of our presentation for today is "Just Keep Buying." I know that this sounds a little bit off given how bad the market has been over the past quarter. But I just like to give a brief background first. Just Keep Buying is also the title of a book that I just read. The book was written by Nick Majuli. You can find the copy, digital copy on Amazon. And I think it's a great book for everyone to read, both for beginners and for those who have had some experience already investing in the market. But the main gist of his title, or the main gist of the book, is that you keep buying not because you think that the market is going to turn up soon or anytime soon, but because the adage time in the market is more important than timing the market is very, very true. So every time that you put money into the market, it's putting money to work for yourself going into the future. So that's the same message that you want to impart to everyone today. Just keep buying because those investments of yours will bear fruit later on. It may not seem that way right now, but when you look back, maybe 5-10 years from now, then you'll see the fruits of your investments. So to continue, let me start first with a review of the first half. So the market's performance was actually quite good in the first quarter, but then it seemed that everything fell apart in the second quarter. simply because, or actually because, uh, the picture for rate cuts was clouded by sticky inflation, both in the US and the Philippines, and actually other parts in the world. So here in our market, interest rates actually went up instead of going down. Not by a wide margin, especially on the shorter end of the yield curve. But that was really enough to sap um, investors' confidence, and that's why we saw a lot of shares or most stocks pull back and even close the first half lower on the year. Moving forward, it's still a lot of it is still all about liquidity, particularly liquidity from foreign investors. Lawrence mentioned earlier that there's been a little bit of foreign buying recently. But when you look at the long term chart, which we're looking at now, the interest of foreign investors is still clearly on the downtrend, and it's really not clear when they will return. But on the other hand, local volume seems to be picking up. So you can see in this chart, also a long term chart, or at least a medium term chart, um, market volumes through the first half of the year have been significantly better compared to most of 2023. Um, it has pulled back again over the past few weeks, but we believe that volumes are going to improve moving forward. Local volumes are going to improve further moving forward as the BSP starts to cut interest rates. Now, still on foreign flows, you can see in this chart that most, or actually all of the buying in the run up to the country's investment grade rating and towards 2015 have all been wiped out. This really shows, in our view, that foreign funds appear to be sufficiently underweight on Philippine equities already, and we believe that foreign selling will abate pretty soon. This chart shows that in an even clearer picture. We can see that in 2020, net foreign selling was over 2.5 billion. It then went down to 1.47 billion in 2021, and then just over a billion last year. And for the first half of this year, it was 238 million. So we're on track to have the smallest net foreign selling since 2019. And that should be a very good thing. A little bit below 500 million in foreign selling for the full year is not bad at all. The local investors would be able to absorb that relatively easily, in our view. Now, this one shows the net foreign selling or net foreign buying of selected stocks. So you can see on the right hand of this chart, you will see the biggest names in the market. So SM is there, AC, BDO, Jollibee, SM Prime, AEV, and Ali. And that really speaks to the lack of sentiment, especially for the big caps in the past quarter. But we believe that over the long term, the huge foreign selling is actually an opportunity to accumulate for local investors. Now, just want to re-emphasize and elaborate on what I said earlier. This chart shows the value of the foreign-owned float in the 13 Philippine MSCI members. Of course, SM quite is the largest and goes all the way to JGS, 22 billion pesos worth. All in all, these 13 companies, have a foreign-owned float worth about $26 billion. That's 0.36% of the MSCI emerging markets market cap comparing that to the estimated float of the Philippines in the MSCI index, which is about 0.5 to 0.55%. Then again, this shows, in our view at least, that foreigners are already sufficiently underweight on the Philippines, and they may be coming to the end of their selling. And this is, of course, assuming that there's no other significant crisis on the horizon. Moving on to inflation, the consensus view on Bloomberg is for inflation to be stable at 3.9% for the month of June. However, in our view, it's going to be significantly lower than that. We believe that the ERC's decision to stagger the higher prices in Western is going to have a significant effect. And for Meralco, in particular, which accounts for a significant chunk of the country's distribution, June retail rates is about 21% lower year on year. So this is going to have a significant effect again on inflation, because electricity has a 4.5% weight in the headline CPI. So in our view, sorry, this is a different chart. So in our view, inflation for the month of June will actually be closer to 3.5% in our view, and that's much lower than consensus view. Moving back to this chart, I just want to show also that the benchmark price for rice in Vietnam, where we get about 80% of our rice imports, has rolled over. It has gone down about 11-12% from its peak. There's significant, or at least moderate, correlation between Vietnam's rice benchmark price and the rice CPI in the Philippines. So as the price in Vietnam continues to fall, and we believe it will continue to fall because their harvest will be soon. I believe it's in August and September. Their farms have also been receiving significant rainfall after the El Nino phenomenon. So we believe that the rice prices are going to continue to go down moving forward. And even without EO 62, we had already penciled in inflation, headline inflation, to fall below the midpoint of the BSP's target range by year end. So moving on to monetary policy, our view is that the preconditions set forth by Governor Remolona a few months ago for easing monetary policy are close to, or actually have been met already. He mentioned a few months ago that before they start to cut interest rates, there should be, one, good news on inflation, number two, somewhat weak GDP growth. So in April and May, inflation actually came in below expectations. For June, again, we're looking at significantly lower inflation. And then first quarter GDP growth came in below consensus. And we believe that the same will happen in the second quarter. So the preconditions have been met, and our view is that the BSP will start to cut rates by next month. And if not, at the latest, it should be October of this year. Moving on to valuations, you can see in this chart, the dark green line is for the PSEI. The lightest green is the MSCI ASEAN Index. And then the last one is for the emerging markets index. So the PSEI has rarely been at a larger discount to the region and its emerging market peers. And when you look at the chart, you'll see there that it's the lowest in the past 10 years. Sorry, lowest since 2010. You'd have to go back to the great financial crisis to see a lower valuation. So it seems that the market is trading at crisis valuations without any actual outward or obvious crisis. So if there is any crisis, it's actually more a crisis of confidence. And we believe that this can be attenuated, this can be tempered once once the BSP starts to cut interest rates. Actually, we're going to spend some time on valuation. Another chart that you want to show is that the PSEI's earnings yield is well above the 10-year yield. So equities very, very attractive relative to bonds right now. However, our view is that local bondholders, local investors in fixed income instruments are not yet going to sell. They are likely to wait until the BSP is well underway towards cutting interest rates and easing monetary policy before they start to sell. And this is because they want to crystallize their gains, crystallize gains from their bond portfolios or fixed income portfolios. And we believe that that will happen sometime in the first half of next year. And that should kick off a great rotation into equities that will boost prices, boost valuations for the market. Another thing that I want to show is that the Philippines 10-year yield is closely correlated to its US counterpart. The correlation coefficient is 0.78. So when the Fed starts to cut its own rate, and we believe that that will also happen sometime in the second half of this year, then interest rates there will fall and that interest rates here will follow. So there will be two factors that will start to pull down interest rates here. First is the BSP's own easing cycle, and the is um, second is interest rates in the US will also have a significant influence on interest rates here. Another thing about valuation, the Buffett ratio shows or signals that equity prices are also very attractive. Again, you can see here the Buffett ratio is at the lowest, except for the crisis years during the pandemic and then the great financial crisis. Again, trading at crisis valuations, despite the fact that there is no outward or obvious crisis for the Philippine market. So again, we believe that valuations are going to improve. We think that the BSP will cut interest rates by 50 basis points this year and probably another 100 basis points in 2025. Going on to the economy, as I mentioned earlier, we believe that second quarter GDP will again be below consensus. Although there are positive signs, one of which is that government spending picked up in both April and May. We have also seen better trade data. The trade deficit has been shrinking over the past 2 quarters, so that those two things will help GDP in the second quarter. However, I want to show this chart on Meralco's sales volumes. This chart goes all the way back from 2010, up to the present. The dotted gold line shows the trend line from 2010 to 2019, and you can see towards the right part of the chart that Meralco's sales volumes in the most recent quarters appear to be below the 2010 to 2019 trend. And so that speaks of weaker momentum for the local economy which we think extended into the second quarter. And that's why we are not so bullish about second quarter GDP numbers. Or at least this is one of the factors that we're looking at. Next, one of the key factors on the external front is, of course, the US elections in November. President Biden currently facing pressure to step aside so that the Democrats can nominate a different candidate for the post. But if he doesn't, then the polls show that Trump has a significant lead, especially in the 8 or 10 swing states that are all important in deciding the US election. So if Trump 2.0 becomes reality, then we see or we foresee significant volatility moving forward. But it could also be possibly beneficial for emerging market equities. And this is because one of the things that marked the first Trump presidency was a relatively weak dollar. You can see in the first half of this chart, the dark green line. So after Trump was sworn into office, of course, the trade war with China, putting pressure on the US dollar. And you can see also that the MSCI Emerging Markets Index actually rallied during that period and ended uh, the term of Mr. Trump on the positive side, whereas the dollar ended up on the negative side. So so a weak dollar is generally positive for emerging markets equities, and we believe that that will help pull up equity prices in the Philippines, especially since valuations are so low at the moment. Next is on corporate earnings. What you want to say here is that first quarter 2024 earnings were broadly better than expected. You can see the impact of that in terms of consensus estimates. So for the PSEI index nominal EPS, it improved 2.1% for 2024 consensus EPS since April 1. 2025 was up 2.5%. Now, 2% or 2.5% doesn't seem that much, but the 2.1% increase for 2024 is equivalent to about 13 in terms of the nominal EPS. And with a PE of 10, that's 130 PSEI points. In other words, if the nominal EPS did not increase by 2%, then the PSEI would be about 130 points or 140 points lower than what it is today. So that 2% is still a big deal. So moving on to our stock picks, one of the screens that we used is we looked for companies that are trading at significant discounts to their 10-year mean or 10-year average PE ratios, and you can see the list here. It's rather long, and it's also full of, again, the big names. Many of the big names are on this list. So again, that speaks of like a crisis of confidence in the local market currently. So we are partial to stocks that are trading at deep discounts to their historical averages. On the other hand, we're not prioritizing, and we encourage clients um, to look beyond the names that are here. These are the names that are trading close to or above their historical means. Of course, in both cases, there are exceptions depending on the story or the fundamentals of the companies themselves. So for our top picks, it didn't really change much compared to the start of the year. The only one that we replaced was Espinec. And this is because we realized that the stock probably needs a lot more time to recover from the negative sentiment and negative publicity brought about by the series of trading suspensions last year. This does not mean that we don't like the stock anymore. We are still a buy on the stock. We still like it for the long term. But we believe that our replacement, RCR, is going to perform better in the next 6 to 12 months. So just a short review. The year-to-date change, as you can see in this chart for each of the companies in our list of topics, resulted in a simple average gain of 3.3%. This is despite the fact that most of them are actually in the red. But at least we're quite happy to say that on average, using a simple average, that um, this portfolio would have gained 3.3%, which is 4 percentage points better than the PSE index's 0.8% decline for the first half. So I just want to discuss a few of these stock picks in a little bit of detail, or at least I want to discuss the main selling points, so to speak, for each of these. For Plus, for example, our view is that the company's gross gaming revenues are set to surpass Bloom's in the next 1 to 2 quarters. You can see the progression in the gross gaming revenues for each in this chart. And this is despite the opening of Solaire North in May. We think that the momentum for Plus is quite significant, and the company will eventually overtake Bloom. Probably, maybe in the second quarter or even third quarter of this year. Next is on SM and SM Prime. As you can see, the weekly forward PE ratios for both are at levels not seen for more than a decade. So in the case of SM Prime, you'd have to go back to 2011 to find similar valuations. For SM, it's even farther back. You'd have to go back to the Great Financial Crisis in 2008, 2009 to see similar valuations. So again, this provides opportunities for long-term investors. Next is for GT Cap. This chart shows the total vehicle sales of the industry, at least based on COMPI data, going back from 2004 to 2023. We drew the trend line for 2003 to 2019, and the gap between the two, which is denoted by the shaded area, in our view, represents the potential pent-up demand for the car industry. So that shaded area is equivalent to about 400,000 units. Now, there is pent-up demand because the replacement cycle for cars was extended and was delayed by the pandemic. So, of course, everyone drove much less in 2020, 2021. And so cars up to today are probably still in good running condition despite being bought back in 2018, even 2017. So, but moving forward, starting this year and probably accelerating into 2025, that replacement cycle is going to gather steam, and that will redound to significant growth for the car industry. And that's why we are quite bullish on GT Cap, actually, because of its exposure through Toyota Motors Philippines. Next is on Manila Water. The company's First quarter performance was well above consensus expectations. Um, we believe that there's still additional upside to consensus EPS this year and next. And so the stock is actually trading cheaper than it appears, cheaper than the 6.9 times that we have noted in this chart. And with that, Manila Water's discount to regional peers is at least 40%. So we believe that despite the huge run up in the share price, there's still a lot of room for the share price to go up. Next is on Monde. Monde also, like Manila Water, had a first quarter that was well above consensus, and we believe that that earnings surprise is going to repeat in the second quarter. And that, again, like Manila Water, we believe that consensus EPS for 2024 will increase substantially in the next few months, in our view, by at least 15%. And this is based on the fact that the company has been able to lock in commodity prices at much lower levels compared to last year. And that will redound to higher margins moving forward. And all of this, of course, already takes into account the still uh, negative performance of the company's meat alternative business. So we have taken that into account already. So moving on to our key recommendations, again, as the title of our presentation shows, just keep buying. This chart shows that if you owned the PSEI at the end of June, then the average return since 2016 over the next 6 months is about 3.2%. So if you keep on buying and you still own the market or the PSEI at the end of July, the expected return over the next 6 months is about 3.6%. This is from 2016. Although past performance, of course, really cannot really predict future results, but we're quite confident about the second half of this year, especially with the BSP starting to cut rates. So first, just keep buying, and second, stay invested in the market. Second, the market is probably close to bottoming out, not just because of foreign selling starting to abate, but also we can see in this chart that looking at 10-year rolling returns, the PSEI is at its or close to its historical low, and we believe that this chart is going to turn up soon, and we will probably see better performance in the second half of this year. Another thing that clients may want to do or maybe may think of doing is to construct a portfolio that is sensitive to easing monetary policy. So we made this chart that shows the historical correlation of selected stocks with the BSP overnight rate. This is monthly data going back to, in most cases, the data goes back to 1994. So that's 30 years of data. And hopefully that gives a degree of confidence for the numbers that you see in this chart. Of course, there are stocks that are more recently or were more recently IPO'd, but on average, the 37 names that you see in this chart have a data set on average of about 28 years. So pretty long, um, quite a good history there already. And on average, you'll probably see the same numbers over the next 6 to 12 months. So if the BSP is going to start easing monetary policy, it's probably a good idea to overweight your portfolio towards the names on the left side, on the left-hand side of this chart. Now I want to spend a little bit time on REITs. REITs is one of the sectors that we are overweight moving forward. Obviously, because this is because of expectations that interest rates are going to go down. Now, in the Philippines, we don't have a lot of history to look at. Of course, REITs only introduced to the market in 2021. So we looked at data in the US. Please look at the chart. RMZ represents the MSCI index for US REITs. Of course, SPX is the S&P 500. And we compared the ratio of these two to the US 10-year yield. So basically what this chart shows is that as interest rates go up, US REITs tend to underperform the S&P 500, and then the reverse is true. If the 10-year yield declines, then US REITs tend to outperform the S&P 500. So just to be clear, this not only says that REITs will give positive returns as interest rates go down, but it also says that REITs will outperform the broader equities market as interest rates go down. So there's a strong inverse correlation between the two, and we recommend being overweight on REITs moving forward. So, but which REITs do we recommend? One factor that we want you to look at is in this table. This basically shows that RCR and CREIT appear to be under-owned by the GFIs and the trust departments of banks. So when there is buying as interest rates go down, we believe that it will be more concentrated in RCR and CREIT, simply because these institutions own too little of them. On the other hand, MREIT and then PhilREIT appear to be quite overweight already in terms of these institutions' portfolios. And then A-REIT appears to be just neutral. So overall, our preference is to be invested in RCR and CREIT in anticipation of falling interest rates. So this chart just shows that the yield of A-REIT has a significant correlation to the 10-year BVAL. This also supports what I mentioned earlier about US REITs. But I wanted to use US data because when you look at the numbers for RCR, MEG, and PhilREIT, there doesn't seem to be a correlation. That's why I wanted to use US data. And then I also want to show that higher yields means higher sensitivity to a drop in interest rates. You can see the current yields here for the various REITs. Now, on the face of that, we would have to favor the likes of VREIT and PhilREIT and DDMPR. However, these REITs have exhibited lower dividend payouts in recent quarters. And so it seems that the market is demanding higher yields to compensate for the risk of a further decline in dividend payouts. So it doesn't make sense to be overweight in these names if their payouts are going to continue to decline. And I just want to show here also the average daily turnover for VREIT, DDMPR, and PhilREIT are very, very low compared to the others. And then, of course, a longer average lease expiry is better. Crete is at the top because it leases out, it just leases out land, and that's on a very long term basis. AREIT is second with 10.1, but we want to show that if you exclude the lots of the industrial lots under AREIT, then AREIT is actually closer to the bottom end. That's another reason um, why we think we should just be neutral on AREIT. That's it for my presentation. Again, I hope you got a lot from that. I turn back the floor to our hosts. Thank you.
Okay, thank you very much, Sir Nicky, for your thorough and informative presentation. I hope everyone was able to take note some of the key insights, and if not, you may be able to play back some of the key parts just to dig into those notes. And I'm sure these insights will definitely help your investment decisions, especially in this second half of 2024. So I am seeing a lot of interesting questions, and it should be time to address them. So I'd like to call back Sir Lawrence as well, back on the floor. Uh, guess we can start. Sir Lawrence, Sir Nicky, are you ready?
Go ahead.
Okay. So I guess just a brief overview for the market. So our first question from Steady Tito. Sir Nicky, is there a slim chance that we will cut interest rates before the Fed does? And what are the possible consequences if we cut first ahead of the Fed?
Okay. Actually, I don't think it's a slim chance. I think it's a fat chance, actually, um, that the BSP will move first. Our view is that, again, our view is that the BSP will move as early as next month. Um, on the other hand, the Fed might move in September, but it's more likely to be in October of this year. So a little bit ahead, a few months ahead. And the consequence of that is probably further weakening of the peso, um, maybe past a little past 59, maybe even 59.50. But most of most of the depreciation of the peso has probably been is probably in probably there already. It's been accounted for by the market already. After all, BSP Governor Remolona started to signal the possibility of a move in August. I think as early as 2 months ago, and at that time it wasn't still wasn't clear when the Fed will move. So um, a lot of the peso's depreciation over the past few months has actually been in anticipation of an earlier move, I believe, from the BSP. So again, the peso probably um, falling past 59, but towards the end of the year, with the Fed catching up, we believe that the trend for the peso will reverse slightly. We think that the peso will end the year back at 58, and then appreciate in 2025 as the Fed's rate cutting gathers steam. So for us on our end, we're not really too concerned about the peso's depreciation.
Okay, thank you for that, Sir Nicky. And something to note as well is some countries or some central banks have also started to cut rates ahead of the Fed and prior to even in the prior months. So thank you for that again, sir. Going our local back to the local news, with the increase of minimum wage, will it prevent the BSP from cutting rates?
Okay, the the minimum wage was hiked by 5.7%. when you look at the inflation for the bottom 30% of households, and we look at that because it's the minimum wage really affects uh, mostly them. So the average inflation for the past 12 months for the bottom 30% is 5.2%. So those households that will benefit will actually see only a very slight increase in their um, real spending power compared to the compared to 12 months ago. So we don't think that that will move the needle much in terms of the volume of consumer spending. We don't think that that will shift the demand curve at all, and so we don't think that uh, that it will be a driver of inflation in the near term, and it won't affect the trajectory of the BSP's projected rate cuts.
Okay, thank you, Sir Nicky, again. And uh, now moving on uh, to the index. I think there was a question earlier on whether we are expecting any dips. So I think this is a question as well for Sir Lawrence. So do we expect another dip to around the 6,100 levels?
Lawrence, I think you're on mute.
Okay. The likely move for the short term is actually is actually to the upside. We are looking at the 6,500 level. If we can break and stay above 6,500 level, then we should see the market slowly recovering lost ground, probably towards the 6,700 level. And so the key thing right now is the 6.5. That's where the 50-day and the 200-day moving average lines are clustered together. Yan.
Okay, thank you, Sir Lawrence. I guess there's an additional question. What about on the other end of the spectrum, sir? 7K perhaps? Maybe how long or will we see it this year?
That's quite a tall order, I think, in the short term, because there's a huge resistance at 6.8. Remember, that's where the index broke down back in early April. Then we saw a subsequent rally to just below 6.8 before collapsing all the way to 6,100 plus. So 6.8 would prove, I think 6.8 will prove to be a tough resistance as well as the 7,000 level.
Okay, thank you for that, Sir Lawrence. And I think we can proceed to more of the individual names. So first from Jake Peralta. I guess we discussed earlier from Sir Nicky's presentation on RCR, but on a technical standpoint, is it good to buy RCR? Thinner volumes, and it looks like an end cup with a handle. Thoughts, please.
Well, RCR is consolidating above the 50-day as well as above the 200-day moving average line. So slowly accumulating RCR would be okay. We just don't know when the stock will finally make its move. Yan.
Okay, thank you, Sir Lawrence. And then I think there are two questions asking for the outlook for SEC. I think we can do both fundamentals and technicals on this, Sir Dicky.
Hey, thanks for the question. For Semirara, coal prices are still down. Um, so that means we're looking at or we're looking for continued softness in earnings for the second quarter and third quarter of this year. We don't see coal prices moving up anytime soon because of the weakness in China's economy. Um, China actually having to for example, China actually having to export oil products because there's not enough demand in their own country for what they're producing. So they're actually pushing out products instead of importing more. And so this will continue to depress coal prices. However, think that that will uh, we don't think that this will significantly impact the cash dividend payouts of the company. We believe that they still have the capacity to pay out significant dividends um, for the next, at least for the next year. And so the share price should remain steady, um, moving up when the dividend announcement draws near, and then correcting after that. So we would um, probably wait at lower levels. Personally, I would wait at lower levels for Semirara, and that's because the next dividend won't be until October of this year.
All right. Thank you for those insights, Sir Nicky. Now, we would like to also get some technical insight naman, Sir Lawrence, on ASEN. Sir Jerry Chua is asking, Abacusec recently changed its recommendation on ASEN from sell on rally to trading buy. What would be your recommended entry and exit levels?
Okay, for that, ASEN is looking to break the recent high of 528. A break of this level may lead to a test of the other resistance levels at 5.54 or 5.65 or even 6 pesos over the medium term. The long-term chart of ASEN has been improving, especially with the recent cross-up of the 50-day above the 200-day moving average line just a few days ago. Yan.
All right, thank you for that, Sir Lawrence. Any thoughts, Sir Nicky, that you would like to reiterate about ASEN?
Yeah, we changed our recommendation to trading buy because we're anticipating second quarter numbers to be quite good, same as it was in the first quarter of this year. And this is because the company has moved into a net merchant position. This means that they are selling more into WESM rather than buying from WESM. So, and since um, prices at the spot market were much improved in the second quarter compared to the first, then the contribution of, I guess, what you call electricity trading for ASEN will be significantly higher in the second quarter compared to the first. And then in the second quarter of last year, ASEN was still in a net deficit when it comes to their merchant position. So they still recorded a loss on their electricity trading last year. So it's going to be a significant swing in the profitability of ASEN. Again, that's why we changed our recommendation in anticipation of the earnings, which will probably come out maybe towards the end of this month or maybe the first week of August.
Okay. So that tells you something about the timing as well, sir. So for the next question, Rainier.
So from Ken, I think more on the PSEI rebalancing this coming August. So how do you think of the possibility about SMC's deletion because of its trading volume and close market VWAP of China Bank versus AGI, which may connect to China Bank's PSEI this August?
Um, I haven't looked at the trading volumes of San Miguel recently, but I think it's still very far from being deleted from the PSEI. Um, to be eligible for the PSEI, the the trading volume has to be within the 25% or the top 25% quartile. I mean, um, among all qualified stocks in the PSE, and I think that San Miguel will easily fall into that category, at least for this review period. Not so sure about succeeding ones, but I don't think that San Miguel is any danger at all of being deleted in this upcoming review. Now, with regard to China Bank, um, when you look at um, the market capitalizations, you when you look at the market capitalizations in the context of the PSEI review, you don't look at the current market cap. You look at the uh, volume weighted average price market cap, or the VWAP market cap of the companies that are eligible. So so since China Bank came from a low point, quite a low point 12 months ago, then the VWAP market cap of China Bank is still low compared to the ones in the index. Uh, Possibly, if China Bank's share price continues to go up in the second half of this year and into 2025, then I foresee the possibility uh, that China Bank would have a chance at entering the index maybe 1 year from now, or maybe 18 months from now. But that's a big if. Um, because again, it depends on whether or not China Bank can sustain its rally, and it also depends on how the share prices of the other companies um, perform. Then also, if Mint comes to the market in the early part of next year, then Mint is a shoe in for inclusion into the index, and that will push back the possibility of China Bank's entry into the PSEI. So again, what I'm trying to say is that there's a lot of moving parts. We try to anticipate these. We try to give you the best advice. But for now, actually, what we're seeing is that there's possibly going to be zero changes to the PSEI um, after the current index review is, or the results are announced later this month, at the end of this month.
All right. Thank you for that very comprehensive answer, Sir Nicky. Now we want to move on to something technical first. So regarding Keeper, Sir Lawrence, is the uptrend intact for Keeper?
Yes, Keeper is trading near the high of the past several weeks. So if this trend continues, then we should most likely see a consolidation between 160 to 180. Hopefully, we'll see a breakout above 180 for a rally to new high for the first time since it became Keeper. I believe the high was 185, I think. So yeah, we should be looking at 185 for the breakout.
All right. Thank you for that, Sir Lawrence. Next question, Rainier. Is there anything
Okay.
interesting? Mhm.
Yes. We have been seeing questions from the most recent addition to the PSE. So for CREC, is it safe for long term, Sir Nicky?
Um, I think it's not only safe, but I think that there's really a long runway for growth for CREC. When you look at the company's plans to build out 5,000 megawatts of capacity until 2030, you actually see a lot of visibility for the first 2,000 megawatts. So, um, of course, there's always completion risk, there's always financing risk. Um, but given the construction DNA of the shareholders behind CREC, then we're quite confident that the first 1,000 megawatts will be in place by the end of this year, or by the at least by the first quarter of next year. And then the next 1,000 megawatts will probably follow 12 to 18 months after that. So they're coming from a base right now, I believe, less than 300 megawatts. So that's huge growth, at least six times growth in terms of capacity over the next 2 years or so. So again, it's not only safe, but we think that there's really a lot of long-term capital appreciation in store for CREC holders. Um, of course, just to temper expectations, again, there are risks, execution risks, financing risks, and then also the price stabilization, I believe, will end quite soon. So there's going to be a lot of volatility. There may be a lot of volatility for the share price moving forward, and you can probably use that uh, to your advantage by buying at lower levels once the price stabilization is over.
Thank you, Sir Nicky. And I think Sir Lawrence, it's still too early to chart CREC for now. But I guess we can move on to the next question. Maybe for you, Sir Lawrence, ideal entry point for Plus and SM Prime.
Plus has been holding above the 50-day quite well. That level is at 13.35, and we have a breakout today. We should see Plus going to 1478, or even try for its recent high of 1498 if this trend continues. I would say the ideal buy point would be near 14. Then we have SM Prime. The 10-day moving average line is fast catching up with the 50-day. I think the entry is just around this level, just buy, and we would see momentum probably carrying the stock to around 30 pesos in the near term.
Okay, Sir Lawrence, thank you for that. And I think there's an additional question on Plus as well. Maybe this time for fundamentals, Sir Nicky. Can it go higher?
On the fundamentals, our price target is 18, so definitely it can go higher. Um, we want to wait until the second quarter numbers come out, of course, but we're quite confident that both the top line and the bottom line are going to improve. One of the reasons is that effective April 1 of this year, the share of PAGCOR in the gross gaming revenues of Plus declined significantly. So uh, on a quarter to quarter basis, we believe that the impact um, will be, if I recall correctly, around the area of 500 million per quarter to the bottom line. So on that alone, you should see significant growth already for Plus. And on top of that, they added more games. I think the some of the games are quite popular actually, and the long term impact of that will still be felt. So we're quite confident that Plus will reach 18, and our price target of 18 does not even include the value of does not yet impute the value of the company's lot in Boracay, which they can then develop into a physical casino if they wanted to. But it's not really their priority at this point. But also, if they decide to sell it to another party, then uh, they could crystallize that value for themselves.
All right. Thank you for that, Sir Nicky. We'll keep that in mind regarding Plus. But I think we can move on to a different question from Kay. Actually, sir, it's a two-part question. I'll just flash the last one. But digesting it, sir, Kay is asking, what do we really think about Mac and Seb when the Philippine government target of tourist arrival growth is at 30% and we only achieved 17? And apparently, it's still decreasing month by month. How do we really present the outlook for Mac and Seb then, in light of that, sir?
Actually, we discussed that today in our note. Yes, tourism numbers have been coming down, stagnant at least. On a quarter on quarter basis, foreign tourist arrivals were down 18% year on year. However, the vast bulk of the passenger volumes of Cebu Pacific are, of course, domestic. And what they said during the second quarter briefing, and Rainier attended that, of course, is that the forward bookings for April and a few months beyond were actually quite strong. Um, and that speaks of the domestic travel business of Cebu Pacific. Maybe Filipinos are concentrating on local travel because the peso is so weak. So, in some cases, they may be postponing foreign travel in favor of local travel. So, we still see passenger numbers of Cebu Pacific to be quite strong in the second quarter. And that should also redound to the benefit of macro Asia. Um, Having said that, there are pockets of growth for the international business of Cebu Pacific. I think it was just today or yesterday, Mr. Gokongwei said that Cebu Pacific carried record numbers of Filipino tourists, outbound tourists to Japan. So there's huge demand going to Japan, which is experiencing the opposite of what we are experiencing. Sorry, the same thing that we're experiencing, very weak currency for Japan. So a lot more tourists going there. So again, there are pockets of strength on the international side for Cebu Pacific as well.
All right. Thank you for the answer, Sir Nikki. Rainier, what's our next question?
Okay, I think we can move on to uh, Sir JL. May I inquire about your fundamental, and probably we can add in technicals as well, on Shell PH given the continuous rise of oil prices?
Um, Shell's market share, based on the past few quarters, has been on the decline. Um, we don't know if this is a conscious decision to pull back on advertising or a conscious decision to slow down the pace of imports. Um, but it also speaks about the better competitive position of Petron, basically because Shell shut down its refinery. So that really helped Petron. So that may also be a factor. So we're not too keen on um, Shell, specifically about the falling market share. Also, they have said recently that it's unlikely that they're going to reinstate the dividend soon. So that reduces the attractiveness of Shell, despite the fact that they do have a dividend policy. So we're not. Uh, what we're saying is that Shell is not currently on our radar when it comes to investing.
Thank you, Sir Nicky. Sir Lawrence, maybe there are some interesting thoughts on technicals for Shell.
There's really nothing going on. It's just drifting lower. It has been drifting since before pandemic. Before pandemic, it was trading above 40 pesos, and it's now down to 10 with no signs of reversal in sight. But personally, I think the downside is not that much anymore.
Okay, thank you for that, Sir Lawrence. And maybe we can transition to more trending stocks such as APX. So from Sir LB De La Cruz, thoughts on APX? Maybe on technicals first, Sir Lawrence, before we move on to fundamentals.
APX has been consolidating since mid-May, and it has held above the 50-day moving average line. Today we saw some positive action, and if ever it can break a recent high of around 4 to 410, then 4 to 412, then we should see Apex going further up, probably testing the 420 level first before going even higher.
Um, on my end, the price of gold has um, pulled back significantly. Um, it may continue to do so as long as interest rates in the US are still high. Although I mentioned that interest rates are probably going to uh, come down later this year. But for the meantime, the weaker price of gold will probably weigh down on the company's second quarter numbers, maybe even third quarter numbers. So, um, not really looking closely at Apex right now, but maybe something for 2025. Um, by then, the rate reset of the Fed will be well underway, meaning lower interest rates. And if Mr. Trump does win, a weaker dollar will also be beneficial for gold. So Apex might be something to look at more into 2025.
Okay, thank you for that, Sir Nicky. Kadis, do you see any interesting questions?
I think we're down to the last few questions, Rainier. I just have one here from Jake Peralta, I think. He's asking, should we top slice MWC? Is it already overbought or rally growth momentum is still high?
Um, I don't see anything on the horizon for Manila Water that could possibly cause holders to sell. Second quarter numbers, for example, should still be strong. And then going into the latter part of this year, we will then start to anticipate the next round of tariff hikes for Manila Water. Because remember that the tariff hikes for Manila Water granted by MWSS was staggered over 4 years. So um, this is the second year. We'll see another one 2025 and the last in 2026. So that series of rate hikes um, will probably continue to underline the share price of the company moving forward. Another thing, um, the feared El Nino in the second quarter, and even though the temperatures were very, very hot in the second quarter, the the operations of Angat Dam were never really hampered. So volumes should also be strong in the second quarter. Um, and that's why we think that the share price might get a pop when the second quarter numbers come out. So I really wouldn't top slice right now. Maybe if the share price goes up another maybe another 10%, then maybe I would think of top slicing.
Thank you for that, sir. What about on your end, Sir Lawrence?
Oh, there's a resistance at 28, but I think there's a good chance of the stock breaking out. And if ever we see a breakout, then next target would probably be 29 to 30.
Okay, thank you, Sir Lawrence. And Sir Nicky, I think there's a bit of a maintenance question. What is your year-end forecast for the PSCI level?
Um, with uh, with the BSP starting to cut rates, um, with foreign selling starting to abate, and maybe the Fed also starting to cut rates in the second half of this year. Um, then we see the possibility that the forward PE ratio of the market will re-rate upwards to about 11 times. That's not much, but at 11 times forward PE and nominal EPS for the PSEI of about 640 to 650, then our target for the PSEI at year end is about 7,200. So um, a little bit over 10% um, from current levels, which we think is good enough given what we've seen in the last 3 months.
Noted on that, Sir Nicky. Thank you. And just another question, since I think you've been quoted a lot in some of the news articles, online articles. So this question, will Gcash do their IPO in the PSE?
Um, unless current conditions improve significantly, um, I foresee the possibility that management would prefer to do the initial listing overseas, because I'm quite confident that they will get better valuations overseas compared to the Philippines, to the Philippine market. Um, and then later on, they can simply do a listing by way of introduction here in the Philippines to do that dual listing. I think that's the better course of action for them. It's not ideal. It may not sound patriotic, but um, if you really want to maximize the value of Gcash while doing an IPO, I think they're better off doing it overseas first. That's my honest opinion.
Thank you, sir. And I think we get this question a lot that in case Gcash does their IPO, what will be the impact to Globe?
Um, Globe owns, I believe, at least 35% still of Mint. So that will crystallize the value for Globe. We've said before, we believe that Gcash could command, again, if it's overseas, they could command a valuation of up to $6 billion. So that will really crystallize the value for Globe, and we will see how cheaply the telco side of the business is being valued at. We will see that more clearly, and in the short term, at least, I think that it will redound to the benefit of Globe's share price in a quite substantial manner, quite substantial margin.
Thanks for that, Sir Nicky. And I think Globe is one of the trending stocks lately, right, Sir Lawrence?
Yes, yes. We are seeing positive action on Globe lately, with a breakout above 2130. Next will be 2180. But the trend is clearly up, with the stock trading above the 10-day as well as the 50 and 200-day moving average lines.
Okay, thank you, Sir Lawrence, for the technical insight. Cadiz?
All right. So I have a question from Through Wells 2021. She's asking, is Espinec now undervalued?
Um, Personally, I think everyone knows my position on Espinec. Um, I would say that it's not only undervalued, but it's quite undervalued in my view. Um, the 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 bad thing really is that, again, as I mentioned earlier, the series of suspensions last year really hurt sentiment, really hurt the market's perception of the stock, even as it has been absorbed by Meralco already. Now that Meralco takeover has significantly reduced execution risk for Espinec, has reduced financing risk for its specifically for the Terra Solar project, um, and we foresee that this will change only um, when the Terra Solar project is close to being completed, and that won't be until at least the latter part of next year. Um, so it's undervalued, but the share price um, probably won't move much in the near term. There's the potential for market moving news once Meralco announces a partner for the Terra Solar project, but we're not too sure about the timing of that. Um, we will discuss that in a future note once that once details of that come out from Meralco.
All right. Thank you for that, Sir Nicky. I think at least that gives us better insight on Espinec, especially coming from you. Rainier, do you have other questions?
Yes. Thoughts on LTG and DNL, sir? Uh, I guess this is both for fundamentals and technicals. Sir Nicky?
Okay, on LTG, it's still a very good yield play, but uh, we've been consistent in saying that with the tobacco business in structural decline, then the dividend payouts will slowly decline over time. Um, so maybe you can still own LTG in the near term, but over time, clients, investors should look forward or look toward other conglomerates that have better prospects in the coming years. On DNL, we're still bullish on the stock. It's still one of our top picks. DNL is a net exporter, so it benefits from a weaker peso. The value of its exports is higher than the value of the various imported inputs um, that it brings into the country. The the value of exports is set to increase significantly over the next few quarters as their Batangas plant continues to ramp up. And then there's the mandate to increase the biodiesel blend, I believe starting on October. So all of that will redound to the benefit of DNL's share price moving forward. So we're still quite positive on the stock.
Thank you, sir. On that note, Sir Lawrence for LTG and DNL.
As for DNL, there seems to be a double bottom near 593. So we are not that far from that. I would consider DNL a low risk buy at current level. Then for LTG, the stock has dropped back to the 200-day moving average line, which normally is a support. We might see a bounce from around current levels, but we do see resistance near 10 pesos.
Okay, thank you, Sir Lawrence. And I think we're down to the last few questions. Next for technicals again, Sir Lawrence on FCG.
It has been consolidating for several months, and the key resistance is near 80. Sometimes it will go slightly above 80, but then it will drop back below 80. But the good thing is that it's forming a series of slightly higher highs as well as higher lows. And it is also finally above the long-term moving average lines. So if I were to bet on FCG, I think we will see a breakout eventually above 80. If ever we see a breakout above 80, then I think the stock would probably go to 1 peso or even higher, 110.
Okay, thank you, Sir Lawrence. And uh, I think that's. I think we still have one. We have time for one last question, and I think this is a question that may be of interest to you, Sir Nicky. Especially, it affects a lot of the consumers, basically Filipinos. So, isn't the BSP able to support the Philippine peso by intervention, even if it cuts rates earlier than the Fed?
Um, yes, that's always a possibility. But when you listen to the comments of BSP officials, especially Governor Remolona, you get the sense that they prefer the peso really to be market determined. He recently said that they only, or they did come in recently into the market just to smoothen out the volatility. But uh, having said that, if they are going to intervene, it's probably not going to be with the purpose of preventing the peso from breaking 59. I think it's just really to smoothen out the volatility. They're not going to, they haven't drawn a line in the sand, and I don't think that they will. They just want to make the movements as smooth as possible.
Okay, thank you, Sir Nicky, and I think that's the last question already, and practically wraps up our Q&A session for today. And again, thank you, Sir Nicky and Sir Lawrence, for your time. And for our viewers who aren't MyTrade subscribers yet, in case you didn't know, we provide our thoughts basically every day for any market updates through our Abacus short takes. You will get emails and be a chance to be part of our Facebook groups where you will be able to ask questions, these types of questions, and be given insights to the pressing issues. So, uh, thank you again, Sir Nicky, Sir Lawrence. Maybe you would have some short parting words, naman, since you've already shared a lot with us today.
Yeah.
Sir
Thank you.
Nicky.
Yeah. Thank you for that. I just want to go back to the title of the presentation, which is to just keep buying. It's not just a slogan in my view. I think it's really something that investors can take to heart. Um, Maybe make it a real motto for themselves to encourage them or to really instill the value of investing in the stock market. So um, very very briefly, it's very brief, but I think it's a powerful message to just keep buying.
Thank you for the wise words, Sir Nicky. What about you, Sir Lawrence? Do you share the same sentiments?
Yes, I think market is at a low risk juncture, and finally we are seeing some positive action with the index making a higher high as well as a higher low. So this is the first positive action in a while. We should see the market going back up to probably 6-7 next target, but we would be mindful of the heavy resistance between 6-8 to 7,000. Remember that the market currently is very much liquidity driven. Whenever there's a huge selling order, it will send a particular stock tumbling for no particular reason except for the heavy selling. Likewise, for the buying, if there's a strong buying, if there's a big buy order, it will send the stock going up. That's why we are seeing very selective action, and just make sure that you're on the right side of those run ups.
All right. Thank you very much, Sir Nicky and Sir Lawrence, for your wise words and especially for your time today. Your parting words sums up this market outlook very nicely. So I hope we get to see you again for a session like this. And we'll take your words to heart so that we'll make better informed decisions for our portfolios moving forward for the rest of the year. Thank you, Sir Nicky. Thank you, Sir Lawrence.
Thank you.
Thank you. All right. So we've ended our Q&A, we've ended our outlook, but wait, there's more. We have a final trivia game where there will be three winners of 500 pesos credit to their MyTrade account. So are you ready for it? Are you ready for it, Rainier? Are you
Ready.
excited? Sali ka ba? If you're ready for it, please type yes in the chat box if you agree, if you want to join our contest. So please type yes in the chat box. Otherwise, hindi ko alam kung kanino ko na lang ipamimigay yung 500. Joke lang. Pero please say yes, guys. We'll wait for your comments in the comment section before we start. Habang hinihintay natin sila Rainier, could you kindly share what are the mechanics for this game?
Oh, Okay, I think this game naman is pretty easy for everyone. So basically, well, kailangan nyo pa rin sumagot. But we'll be flashing the questions on the screen. So ano pa rin naman siya, paunahan pa rin. So you have to read the question and say go. And the first one to type in the letter of the correct answer after the go signal wins. So basically, ano lang naman siya. I think 4 choices siya. Once na makita niyo yung question, tapos pag sinabi go, just type A, B, C, or D. Huwag niyo napahabain, huwag niyo type yung answer para mas mabilis
Yes.
niya siya masagot. And our team will be on standby to determine the winners. So no need to screenshot this time.
Okay. Thank you, Rainier, for sharing the mechanics of the game. So, sabi ni Socorro Calixto, yes, ready na daw siya. Ritz R says, yes, ready na daw siya. Alina Joyce says, yes as well. So, tanong is, team, ready na ba ang ating mga questions? Can you flash the questions on the screen so we can start our trivia contest? Okay. All right. For the Midyear Market Outlook 2024, here are the questions. So number 1, which of the following is an example of an economic indicator? Go!
We have 20 seconds to answer, but paunahan pa rin. So first, among the choices pala, A, GDP, B, employment data, C, inflation, or D, all of the
Or
above.
D, all of the above.
Okay, time's up.
Alright. So, makikita ba natin kung sino yung unang sumagot ng tama, team? Can we
Yes.
flash the name on the screen? Alright. Let me see.
Okay, we have our winner, Mr. Socorro Calixto. The answer is D. Yes, all of the above are examples of an economic indicator.
Okay, congratulations, Socorro. We'll take note of this, and if you can kindly also get in touch with us para at least two-way tayo, we can establish how you're going to get the prize. But moving on to the next question to give chance to others who will win 500 pesos in their MyTrade account. All right, next question. Five, four, three, two, one. Okay.
Okay, so yung correct answer is C, Philippine Stock Exchange.
Letter C, Philippine Stock Exchange. And the winner is LB De La Cruz.
Ooh.
Congratulations, LB.
Congratulations to our Suke viewer, Mr. LB De La Cruz.
Yes. Okay. So, ang dami pa rin nagsasagot. So, guys, last chance nyo na to for the final question. You still have one more chance to win 500 pesos for today's market outlook. So, team, can we flash the third and final question? It refers to the portion of a company's profits distributed to the shareholders. Go!
Is it A, shares, B, dividends, C, ownership, or D, payout?
Parang gusto ko ng maraming ganyan. Alright. So the correct answer is letter B, dividends. And the winner is Ryan De Guzman. Congratulations,
Congratulations
Ryan.
to Ryan.
Okay, so please get in touch with us. Otherwise, if we don't hear from you, we'll be the ones to try and get in touch with you. But two-way street naman tayo. Please initiate also. Just send us a message in our messenger or our chat box, and we'll be ready to respond. For the winners, congratulations again. And I guess that's a wrap for our trivia contest. How are you, Rainier? Kamusta ang yung very first stint as Market Outlook co-host?
Yes, finally. Well, not tapos na, but I was very ano naman, delighted to see everyone being active not only in our trivia games, raffles, but also in engaging with our speakers today who provided really insightful presentations, both for the fundamental and the technical outlook, and really helpful sa pagde-decide natin, especially in our investment decisions this second half of 2024. What about you, Cadis?
Right. I'm very pinaka nag-stick sa akin is when Sir Nicky said it's a crisis of confidence, ano. But I'm sure after watching this market outlook, you guys have gained more confidence in your investment decisions because you are now well guided by MyTrade's experts, Sir Lawrence and Sir Nicky, in your investment decisions. So if you're here and you're joining us for the very first time, this is how we do it at MyTrade. And if you like more content like this, please follow us on social media. We're on Facebook, Twitter, Instagram, LinkedIn, and the standard social media channel. So you can also subscribe to our YouTube channel. This session is can be watched on demand right there. So you can also get updated when we release new video content about anything in the market. Otherwise, kung gusto niyo listening lang, hindi kayo mahilig manood, we also have a podcast. So you can tune in to our Spotify podcast at MyTrade Unplugged to learn better on how to navigate the stock market from the industry leaders. So, yun na. Wrap na din yon for my social plugs. Thank you for joining us today. And thank you, Rainier, as well for joining me here again.
Yes, it's finally a wrap. See you guys in the next, well, not mid-year outlook, but see you in our next events such as the Beyond Connection. So thank you for having me here, team, especially you, Cadiz. See you
Thank
guys.
you, Rainier. Thank you, guys. Catch us again next time. Bye-bye.